government should be quick.
So just a little fun fact now, a lot of heavy duty talking we've done. So I'm going to just sort of insert a fun fact. The GST on popcorn. That had led to a whole lot of memes coming up because 5%, the 5% on unpackaged popcorn was there, and then there was 12% on the salted packaged popcorn, and there was an 18% on the caramelized popcorn. You know, so people had been very, you know, impacted by this.
Even on cream and butter, I mean, butter and cream were at 5%, but if you have a cream roll, it was 18%.
So now they've done away with this categorization. So all popcorn is in 5% bracket, but the caramelized. So if you want to save money and have a little more money in your pocket, go for the salted or the unpackaged popcorn, not the caramelized one. A very warm welcome to the Fin Eco Gupshup, your go-to channel where we unravel and simplify complex economic financial issues for you into bit-sized chunks and no fuss conversations.
No jargon and simple money, economics and financial issues which matter to you in your day-to-day life.
Right. So I'm Rachna and with me is Harmeet, and today we have a very interesting lineup of issues that we are going to be discussing and talking. The tariffs, the GST rationalization and the SCO Summit in Shanghai.
And of
that
course,
sounds pretty heavy, doesn't it?
A bit about the stock markets also.
Yes, of course. Sounds a little heavy, but I hope we are going to be able to manage to keep it light.
We are going to keep it very simple, very easy to understand, like we always do.
Right. So let's dive into our session today. Let's start with tariffs. Tariffs seem to be the talk of the town.
Yes.
So,
USA a few weeks back imposed 25% tariffs on goods which are exported by India and imported into US, and then another 25% over it, making it to be 50%. These were penal because we were buying oil from Russia. So now we
were exporting about $88 billion to India, you know, and 20% of our exports are impacted. Goods like textiles, leather, gems and jewelry,
and
seafood.
And seafood,
yes.
And some goods are still not affected, which is electronics, pharma, software exports, aluminium, copper, steel. They are still not impacted. So out of a total trade of 88 billion which we are exporting to US, about 58 billion is impacted by these 50% tariffs.
Right. So what we need to do is analyze the impact of this tariff on India and our economic scenario here today. So what do you think is the biggest downside here?
I think because US is one of our largest trade partners, number 2 after China, we are going to become uncompetitive in the global market when we try to export to India. Other competing countries are in 19, say like
to 25% bracket.
19 to 25%. In Pakistan is 19%. And we are at 50%. So that makes us uncompetitive, especially textile, gems, jewelry. We lose out.
So this is going to affect the GDP, you know, the gross domestic product that we have. This is going to impact it by, I think, about 0.8 to 1%. Our growth rate till now has been a comfortable 6.5 to 6.7%. But that's going to be impacted after the imposition of these tariffs.
It could be 5.8 to 6% annual growth rate of GDP. And this is going to impact, because these are labor intensive, artisan based
industries,
and there are going to be salary cuts or industries folding up or job cuts. A lot of people, lot of our workforce is going to be indirectly impacted.
And the other important thing is that because of these exports, we were getting to have an inflow of dollars with which we purchased stuff in the global market like crude oil and fertilizers. And now with this tariff imposition, the exports are going to reduce, and so consequently the inflow of dollars is also going to reduce. So that is going to be a bit of a whammy for us, right?
And otherwise also over last several years, US had been on very friendly terms. And we were not expecting this first, definitely not the second bit of imposition.
Absolutely. So it came as a bit of a surprise, unpleasant surprise actually.
We were not prepared in a way for the second one at least.
So what is the way forward? I mean, it's happened, you can't do much about it, so now what?
I think India has to balance between importing cheaper crude vis-a-vis its impact on the GDP, on losing out on exporting, a big exporting partner. So we have to, I think, rationalize our oil exports, balance the two things, and
see if we can find a happy medium. But most importantly, we need to continue our negotiations with the USA because it's been an ally and a friend and a trading partner for so long, and I'm sure both countries wouldn't want cracks to appear in this kind of a relationship. Right?
Right. And we also need to, I think government needs to come out with some kind of incentive scheme where people, industries are encouraged to find new markets, especially in Africa, South America.
Absolutely.
They need support, they need government policy, they need cheaper export credit. And
because too much of dependence on one economy is not really a good state to be in. Not beneficial, So certainly, yes, we need to find new markets, and that's what India seems to be doing now.
We'll discuss in the later part what we are doing.
Right. So what about the second aspect that we were to discuss, the GST rationalization?
Yes, the big bang
That's
reform,
the big news.
Big
Absolutely.
And
a lot of people feel that it is because of the tariff imposition, but that's not correct because this exercise has been continuing since February. The only thing that has happened is that it has been fast-tracked because of the tariff imposition, right? So
GST, if I may explain, is goods and services tax. So all kinds of goods which are sold in the country or services which are sold in the country are levied some form of taxation. This was at 4 slab rates, 5%, 12%, 18 and 28%. And some sin goods or luxury items like cigarettes and beverages, sugar beverages were at a higher rate. Called the sin goods. So now with this, they have removed 2 slabs, which is 12 and 28 are gone. You have 2 slabs, 5% and 18%. And some luxury cars, some cigarettes and some other items like this.
Beverages are 40%, still at 40%.
Rest everything is in 2 slabs.
In fact, in 5% category now you have the economy class travel, you have those smaller cars under 1300 cc bracket, then motorcycles under 350
and
cc.
most of the grocery items and
all the FMCGs.
Household items which we are buying. Fabrics below 2500, footwear under 2500.
Hotel rooms with a tariff under 7,500, all these are now,
And cement, which was a big consumption item, was in 28, now that has come to 18%.
Absolutely.
So this is a big sweeping reform which is going to impact the economy in a big way, in a positive sense.
In fact, it is a part of the 3-pronged reform that the government has been constantly pursuing. They started with the income tax rationalization, which put about 75,000 extra money in the common man's pocket. Then RBI came out with a reduction in repo rate by 1%, so that makes loans cheaper for the common man again. And third, this is the final rationalization that happened, which we'd been waiting for a while.
This would increase domestic consumption, boost production, and the impact of tariff which is going to be there is going to be neutralized in some way on our GDP growth. So GDP maybe is not going to be affected. In
fact, it's going to help construction also, because GST on cement, on paints, that has been reduced. So overall the construction cost is going to come down, which is obviously a big plus for the common man. And
I think, but there are a few issues which need to be addressed. One is that we have done this
Price-based, we've done a price-based GST classification.
So, and there are bound to be people who are going to misclassify.
Yeah, for instance, in the hospitality industry, you have the room tariff, which is 7,500. So if it is below 7,500, it's going to attract a GST of 5%. If it is above, it is going to come in the luxury category, and it will attract a higher GST rate.
And same is for the footwear.
Yes, 2,500 and below.
2,500.
Yes, absolutely.
There is going to be bound to be some mischief.
Kind of misclassification.
The government needs to address.
Yes.
And second is there is
duty inversion.
Duty inversion also needs to be addressed. Say for housing, there is a GST of 12%. 7% is subsumed by the builder on account of various GSTs paid by him, and 5% is paid by the buyer.
Right.
To the builder.
Right.
Now, when the 7% was arrived at, cement was at 28%. And cement being a major component of GST has not come to 18%.
Right.
Similarly, lot of items which were in 12%, wires, cables, so many other items which
have been brought to the lower tax bracket.
So this 7% or this 5% would need some tweaking. And I think lot of such duty inversions will come when we start implementing. But I think government should be quick.
So just a little fun fact now, a lot of heavy duty talking we've done. So I'm going to just sort of insert a fun fact. The GST on popcorn. That had led to a whole lot of memes coming up because 5%, the 5% on unpackaged popcorn was there, and then there was 12% on the salted packaged popcorn, and there was an 18% on the caramelized popcorn. You know, so people had been very impacted by this.
Even on cream and butter, I mean, butter and cream were at 5%, but if you have a cream roll, it was 18%.
So now they've done away with this categorization. So all popcorn is in 5% bracket, but the caramelized. So if you want to save money and have a little more money in your pocket, go for the salted or the unpackaged popcorn, not the caramelized one.
And another thing which people are wondering is that when does it comes on 22nd of September,
the day of the Navaratras.
First Navaratras. The government is hoping to kickstart sales, festive sales. And second is, what point is the GST paid? Like I booked air tickets in business class today. I'm flying in December.
Right.
So do I pay 12% or I pay 18%? Right. This is the new rate of GST. So the government says it will be on the date you invoiced or billed or utilized the services, whatever is earlier. So since it has been invoiced today, even if I fly in December, I pay 12%. In business class. Economy class either way is 5%.
So a lot of good things are happening in the GST front. And they're going to start impacting us right away from 22nd September. So we're going to be saving some money in our pockets.
Lot of aspirational goods like motorcycles, like
the cars.
These have become cheaper.
ACs.
Your household budget is definitely going to improve. You're going to have more money in hand to buy more goods, and this is going to kickstart the consumption.
A lot of domestic consumption is going to happen. So the next and the final point, or should I say the last but one point, is the Shanghai Cooperative Organization Summit that happened in Shanghai, where a lot of SCO leaders came together, and the heads of countries like India, China and Russia also came together, and there was a lot of talk about, trade partnerships and exploring new trading avenues among the countries. And this, I might add, is based not on ideological alliances but on economic alliances.
So you can see how the tariffs have brought in a new geopolitical arrangement, and we have revived our relations with China. I've visited the prime ministers there.
We've been talking to Japan, we've been talking to EU.
He's visited Japan, he's gone to EU. We are exploring other markets, other avenues for pushing our trades, for pushing our economics. So geopolitics is more about economics than anything else.
Absolutely, that's true. And the grand finale of our session, always the stock market?
Markets have not been looking good for last few. People have been despaired by whatever is happening. The FFIs have been constant sellers, and they have almost 90% plus short in the market.
Yes, and the mutual funds are not doing.
They
start selling. And the mutual funds are not doing too well either.
If
the
you
returns
look at
are negative.
The last 1 year return, most of them are 1 to 5% negative returns for the mutual. So investors are losing
confidence in the market. But do you think they shouldn't they be sitting and holding on to the equity and their shares?
If you look overall in the what is happening on the global stage, most of the wars are either closed or
heading to a conclusion.
Russia, which we hope will see a closure soon. That bad news is stopped flowing. Whatever was to happen on tariff front has happened. Whatever big announcements, shockers were to come, have come.
And have been absorbed. Yes.
And our domestic numbers for the first quarter, they were
pretty
decent,
good.
Not bad numbers, decent numbers. And with these 1, 2, 3 reforms on income tax, on RBI's rate cut, and on GST, this is a big boost to the economy, which is going to happen in this will play out in next few months. So 2 quarters from here, you would be seeing a very good market.
Yeah, because companies have reported good results, and banks
the valuations have now kind of
come up to par, basically.
Reasonable.
Right.
So we are hopeful, and stay invested. Don't sell in panic. If you can hold on to your investment, because next 3 to 6 months will give very decent returns. That's what we are hoping.
So that's all for the day. We've covered quite a few issues, very important issues in the market, and we've tried to break them down into, chunks that you would be able to understand and absorb. So please stay tuned with us. Listen to us if you want to know more about the world and the economics and the finances of the world. Shall we say bye now?
Thank you, and thank you for.
So we are signing out now. Bye-bye.